Hey, good morning, everybody. Today is Tuesday, August 25th, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. After a horrifying open yesterday, markets settled down to end just depressingly. Markets opened in bear territory as the Nasdaq started the session down 21.9% below its July 20th high. A loss of 20% being the generally accepted definition of a bear market. The Nasdaq's now down more than 15% from that July 20 high. When it was all said and done yesterday, the Nasdaq and the S&P 500 both were down more than 3.8% for the day on sharply heavier trading volume. Typically, bear markets end with a market capitulation. A high volume, huge sell-off day like yesterday. Was yesterday capitulation? I don't know. What I do know is that historically every bull market has started with a follow-through day, and this one is no exception. So we begin to look for a follow-through day, which is a day at least 4 trading sessions from the market bottom, in which one of the major averages increases 1.25% on heavier trading volume than the prior day. That means that if we don't undercut yesterday's lows, we could see a follow-through day as soon as Friday. All of the indexes that we follow are now trading below their 200-day moving averages. Declining issues bettered advancers by 20 to 1 yesterday. Needless to say, the New York Stock Exchange advanced decline line remains bearish and has been bearish since May. New lows thumped new highs again by a meaninglessly large ratio yesterday. Our market timing model is on a sell signal. A sell signal indicates our stops should be at their tightest levels on any remaining long position. We should sell any long position that, if sold at the normal stop level, would result in a loss. Traders may want to hedge their portfolios with contra ETFs, exchange-traded funds, and aggressive traders can sell short. The O'Neill market timing model is indicating a market in correction. Keep in mind that when the market's in correction, we're always just 4 days or less from a confirmed uptrend. It's in the midst of market weakness that new leadership in the market emerges, so it's critically important at this juncture to keep our watch lists up to date. For the hopelessly bullish among us, small capitalization stocks outperformed large for the second day in a row yesterday and are now outperforming on a 10-day moving average basis. Small caps typically outperform in bull markets. The put-call ratio hit 1.48 Friday and was 1.35 yesterday. The put-call ratio is a contrary indicator, and the last time it was this high was October of 2014, 2 days before the market took off on a 17% 6-week tear. Our swing timing model is indicating an extremely oversold condition in the market. Keep in mind, an oversold market can become a lot more oversold, as we saw yesterday. This is a weak and squirrely market. We should continue to err on the side of caution. As I noted earlier, it's in this weak market that we want to begin to look for new leadership in the next bull market. With that in mind, what we're looking at is Moody's list of 177 industry groups, sorted in HGSI, high-growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market has been in the past week, if there was any strength. We see that computer hardware over the past 5 trading sessions has been up 1.4%. Consumer products have only been down 0.3%. Food products down 1.9%. Leisure clubs and facilities down 2.1%. And non-residential building construction down 2.9%. Let's see what the Nasdaq looked like yesterday. Nasdaq Composite was down 179.79 points, or 3.82% yesterday. It closed at 45.26. Trading volume was heavier than the prior day, giving us a distribution day. For you followers of William O'Neill, we are in a market in correction. Right now, we are on a sell signal on the NASDAQ Composite, which simply means that our stops should be at their tightest levels on any remaining long positions. We should sell any long positions that, if sold at our normal stop levels, would result in a loss. Traders may want to hedge their portfolios using contra ETFs, and aggressive traders can sell short in this market. Let's see what the S&P got up to yesterday. The S&P yesterday was down 77.68 points, or 3.94%. S&P undercut long-term support here, which hopefully we will recapture today. We're trading right now at 1893. The S&P is in a market in correction, and we are on a sell signal on the Standard & Poor's 500. Again, in keeping with the theme of trying to find the leadership in the market, I want to take a look at three stocks. The reason that we're looking at these three stocks is these are the only three stocks in our universal watch list that were actually up yesterday. First stock I want to take a look at is MiMedx Group. MiMedx is working on the second stage base with a pivot point of $13.20. It gets a checklist rating of 64 and has this trend line that may offer an early entry point in the event that we want to get into MiMedx. Next stock I want to take a look at is National Commerce Corp. National Commerce is a holding company for National Bank of Commerce and United Legacy Bank, operating via 8 branches in Alabama and 7 branches in Florida. Stock right now is in a second stage base with a pivot point of 2687 and a checklist rating of 68. And the final stock, Mobileye, is an Israeli developer of software and related technologies for camera-based advanced driver assistance systems. The stock right now is also in a second stage base, has a pivot point of $63.17, and gets a checklist rating of 80. For what it's worth, Mobileye is probably my favorite stock on a fundamental basis at this point. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.